Aluminium Corporation of China agrees to invest $19.5 billion in Rio Tinto. The investment by Chinalco, as the state-owned company is known, is China's largest overseas acquisition. The deal buys stakes in the Hamersley iron ore mine in Australia, the Escondida copper mine in Chile, and bauxite and alumina assets. Rio shares slumped as much as 18% in London, with investors betting the company is giving up too big a share of its assets for too little cash. Stake will rise to 18% if it converts the convertible bonds, which make up a third of the investment. Well, Rick Ronge helps manage the equivalent of $1 billion at Pengana Capital in Melbourne. That includes BHP and Rio shares. Rick, very good day. Rio shares, we have to note, did recover. They actually closed 1.5% lower, but clearly something scared investors earlier on. Do you share any of those fears?
Yes and no. Look, on our analysis, the deal metrics are actually really quite okay, but there's a lot of emotion around this deal. In particular, as you mentioned previously, that there's fear that that effectively the farm has been sold to the Chinese. In our analysis, the asset sale program, or the asset sales, are at a premium to RDC evaluations and through the cycle values, as is the conversion price of the notes, which is a premium to our long-term valuation. So, in terms of our analysis, effectively the deal is not at all dilutive and is really probably the best of two outcomes, in the sense that it protects shareholders, from a very deeply discounted rights issue. There's also a lot of talk in the UK overnight that these assets were being sold at the bottom of the cycle, and from where we sit, that's really not the case. It's just meaningful to note that $5.1 billion of the $12.3 billion relates to iron ore, which is trading at a peak cycle price.
Okay, I mean, there was also a feeling at one point, only a day or so ago, that if Chinalco was offering a low price for these assets, that someone, notably BHP, might march in and say, well, look, we can offer a better price. Do you think that's likely now?
Look, I think BHP has gone from playing offense to defense, in the sense that they had a game plan to pick up quality assets through distressed asset sales. Obviously now, with Rio being recapitalised, it's not the case. In actual fact, puts a very strong competitor in that space. So obviously Rio has a preemptive right on the Escondida stake, but look, I mean, whether or not they can come and play for individual assets is yet to be seen. But you can, I'm quite sure they're lobbying the Australian government to sort of, lobbying the Australian government to I guess, facilitate an ability to I guess, come and look at, individual assets, particularly Hamersley.
Well, exactly. I mean, do you think there's going to be a regulatory issue here?
From where we sit, look, probably not. I mean, with the exception of Hamersley, all the other assets produce commodities that are priced on an open market. So again, there's very little influence there from having, the Chinese moved further upstream. With Hamersley and iron ore in particular, the theory is that this brings the customer to both sides of the negotiating table for the annual iron ore pricing negotiations. The thing is, though, you have to be very mindful that this is a minority stake. The deal will give Chinalco potentially 2 or 15 board seats, and Rio in the release has stressed, that governance will be in place to protect other shareholders. If they can basically, convince the regulatory bodies that this is the case, then it really shouldn't be an issue.
Rio, of course, also announced earnings yesterday. They were overshadowed by this deal, but there was a 50% drop in net income. Do you see this as the bottom, or are things going to get worse? Look,
we've actually forecasting earnings next year to be lower. The earnings result for Rio last night was actually quite good versus expectations. If you rip out the sale of Kintyre, or the profits from the Kintyre sale, it came in pretty well at consensus. So again, I mean, as you mentioned, the focus here is really very much on the deal, and as we mentioned previously, earnings will be, I guess, hampered to a degree next year by iron ore prices off their peak.
Okay, Rick, thank you very much for your time. Rick Ronge, managing the equivalent of $1 billion, Pengana Capital in Melbourne. Now, Rio Tinto shares, as we noted, did tumble, with investors reacting to the Chinalco deal, and at least at the start not liking it much at all. Heidi Cooch in Sydney has more on that. Heidi.
Paul, we're seeing Rio Tinto shares head lower in Australia. They were, of course, in a trading halt yesterday, and this morning that trading halt was lifted. Rio Tinto shares fell in the early trade. We're about 25 minutes into the trading session at the moment. Aluminium Corp of China, or Chinalco, will invest $19.5 billion in Rio. It'll buy just over $7 billion of convertible bonds and $12.3 billion of stakes in individual mines.
I think this will provide us with some competitive advantages in the mining sector in China. This will give us some competitive advantages for exploring in China. I think it will provide access into the markets. But first and foremost, this is the best financial solution to bringing down the debt on Rio Tinto's balance sheet.